Hello everyone, welcome back to the audit and attestation class. In this class, we'll be understanding in detail about the documentation requirement for non-audit engagement, including review engagement. So let's dive into to understand more in detail about the documentation for non-audit engagement and review engagement.
Now we are jumping into the non-audit side. So first we have discussed audit side. In that, what is important for you is being the 45 days, 7 years for the issuer, 60 days and 5 years for non-issuer, and all these points which we have just studied. Now we are coming to the non-audit side. Non-audit side, what is the archival dates? Archival period?
60 days.
Retention?
5 years.
As per QC or else law required by law. Quality controls of the firm.
Absolutely true. As per but general practice is 5 years. Right. Now come to the review engagement documentation. So again, this documentation should enable an experienced accountant to understand nature, timing, and extent of the procedure performed, result of the review, significant finding identified, or issue you have arise, or professional judgment which you have made, and finally the conclusion you have reached. Right?
Yes, sir.
Okay, 1 second. Okay, and documentation should include what all things? Engagement letter, that's a mandatory documentation. Second is communication of fraud or non-compliance with law and regulation. Third is procedure performed and conclusion reached for the emphasis of matter or other matter paragraph. So in audit report or review report, there are certain areas which is mandatorily to report as an emphasis of matter, critical audit matter or other matter paragraph. So for those areas, it is being mandatory to maintain appropriate and sufficient and timely documentation of those areas, even in the review engagement or attestation engagement. Right? D point is management representation letter. That is also a mandatory documentation in the audit file. And for review, inquiry procedure and analytical procedure which you have performed. And lastly, reviewed financial statement and review report. So these are like 6 documents you mandatorily should have in your review file. Right? That should be mandatorily be the work paper of the auditor for the review engagement. Documentation of analytical procedure. What is analytical? Yes, Sandeep.
Can you please go to first point, sir?
Yes.
So that I'm unable to understand sentence formation. Unable experienced accountant to understand.
It's enable. ENABLE. That's why maybe there's a confusion.
That's right. Thank you. That enable. Fine, Sandeep.
Okay, so now I got it.
Thank you. Okay, so now coming to analytical procedure. What is analytical procedures? What all things we do in analytical procedures?
So basically, we check the variations
vouching,
from last year. So
no vouching. No.
so
vouching.
basically variation. So what are the different? I would say a variation in the financial statement line items from last year, and we check whether that is a normal or there is unusual variation from last year. That's analytical procedures.
Variance
so this can be analytical procedures, so like checking gross profit ratio, net profit ratios, and comparison for previous years and the present year. Ratio analysis.
Yeah, variance analysis, ratio analysis, disaggregated analysis. Do you remember what is disaggregated analysis?
I think you explained, but I forgot.
Anyone else would like to give some hidden trial? What is disaggregated analysis? Gurmeet has.
So like it may be like bringing up a value and doing analysis, sir.
Gurmeet has.
No idea, sir.
Okay. So for example, like sales analysis, you're doing. So for sales, you are disaggregating the sales office wise, plant wise, location wise, product wise, service wise, right? That is called disaggregated analysis. When you do the analysis at a disaggregated level, not a complete aggregated level.
Oh, okay.
For example, let's say
Aging analysis could be an example of this.
no.
No.
No, let's say for example, HUL. If you are doing the audit of HUL and you are doing audit of their sales. So in that they have like beauty care product, they have healthcare product, they have, let's say, lifestyle product, they have like FMGC product. Let's say these are four different segments. So when you are doing the sales analysis, you are analyzing all these four segments separately, right? Because they have nothing to do with each other. It's been more relevant to analyze them separately. And then let's say, for example, if you say, let's say, for example, if you're doing audit of Surgeon. So in Surgeon, they are selling their software in USA, they're selling their software in Canada, they're selling their software in Middle East, they're selling their software in India, right? Then you can do the location-wise disaggregated analysis, and after that you can also do the further analysis as product-wise. They sell like CPA, they sell CMA, they sell enroll agent, they sell lead analytics, they sell CIA, CSA. To understand like which segment is doing good, which segment is not doing good, which segment they should continue promoting more, which segment is more profitable, and which segment is maybe loss-making segment, right? So those kind of analysis is called disaggregated analysis. Make sense? Ab to nahi bologe?
Sir.
So that is called disaggregated analysis. And then like for example, let's say normal analytical procedure. Let's say you're doing analytical procedure for rent expenses. So previous year, let's say rent expense was $1 million. And as per rent agreement, you have seen like every year it increased by 10%. So what will be your expectation that rent expense should be in current year?
1,10,000.
1.1 million?
Exactly.
Right?
1.1. Yes, sir.
So for example, like previous year, salary expense was, let's say, $5 million. And year over year increase is, let's say, 15% in salaries. And in current year, let's do a math for me, right? I'm articulating a question. Just note down in your notebook and then help me calculating by doing the math. For example, previous year salary expense was $5 million. Are you guys with me?
Yes, sir.
Yes, sir.
Just make a note in your notebook. Yeah.
Yes, sir.
Let's say previous year the salary expense was $5 million, and year over year normal increase is 15% in salary. And previous year we were having 1,000 employees, and in current year 100 employees have left and 300 new employees have joined. What should be my expected salary expense in the current year?
So in the present year, 100 people left and 300 people came, sir.
And 300?
New joined.
Sorry, sir. How much left and how many left and how many joined?
100 have left and 300 have joined. So this is like, let's say, previous year data. So you have 5
63 million.
salary expense. And in current year, increment, let's say how much? 15%, right? Exit employee 100, right? And 300 are new join. And employee previous year, let's say 1000. Yes. So
It
what
will be
will be?
63 million.
Yes. How do you have calculated that?
So you'll divide the number salary with number of employees.
This divided by this, you're saying?
It's salary for each employee, then you'll increase it by 5%. Sorry, okay, it's 15. So I did it on the base of 5%. You'll increase it, you'll multiply this into 1.15. And then you'll multiply by 1,200. 1,200 employees.
You think this should be your salary expense?
I believe.
How about others?
Yes, so I also believe the same thing.
What about this 100 and 300 information?
What's sir? What about 100 and?
300. What about these
So we
information?
have adjusted in it in the next year because we calculated 5,000 as the per employee expense, and then we increased that 5,000 with 15% and multiplied it with this plus minus 5,000 plus 100 minus 300 plus 300 minus 100. So वो adjust हो गया उसमें 300 में and 100.
Anyone else have any doubt? Sandeep, Rahul.
Sir, here, as per your data, what you have given, sir, this is a general calculation, sir. Unless and until we have any specific conditions or criteria, this can be general answer, sir.
So this you all agree to this number?
I agree, sir. The per head employee, I mean employee cost per person, and increasing it. So if the employees go middle of the year, it will be different again, sir.
So you all are comfortable with this 6.9 million,
sir.
right?
Yes, sir.
Kashish, Garvit, Avneet.
Yes, sir.
Right. So far, so good. So now let's understand the theory basis on this. Expectation formed and factor considered to develop those expectations. So you need to document it. You need to document the expectation form and the factor you have considered to develop the expectation. So now your expectation is $6.9 million should be your salary expense, right? And what is the basis of it? The increment and plus and minus of number of employees, right? Yes, so you need to document like from where you get this 15% increment. So for example, like that's a market trend, or maybe it's already being written in the employment letter, like every year you'll get 15% increment, or maybe like let's say board of director has approved 15% overall increment, or management has already approved 15% increment, right? So those all documentation you need to document in your audit work paper or review work paper. Second is result of comparison. Now let's say actual expenditure is, let's say $7.5 million. Now what you will do, this is your actual expense minus the expectation. Now you have 600,000 difference. Let's say your materiality level is $500,000. And now this is material difference.
No.
Yes, no?
Sir.
So we'll need to understand the factors why it has been increased. Maybe there's a genuine reason to it. Maybe we are giving a higher hike to a particular employee basis his position or something like that. So then we don't call it as a material difference unless it's not justified.
Yeah, no, makes sense, makes sense. So I'm just trying to correlate this theory with some numbers and examples. So what he is saying, result of comparison. Second thing you need to document the result of comparison, which came $600,000 difference, right? So here, let's say you have hired new CEO at $1 million. So the $600,000 increase is majorly on account of the new hiring of CEO, right? That could be the justified reason. Or for example, let's say you are a government entity, 5th pay commission or 6th pay commission has came, and accordingly you have to pay additional increment than the standard increment on account of that 5th pay or 6th pay, right? So those could be justified reason, and there should be a justified document supporting those reasons, right? So you need to document those things, and you need to discuss this difference. Like you will do, like, this is your calculation, this is the actual number, and then you will be inquiring with the management, like, I see like 600,000 is extra increase. What is the reason for its increase? Then management may respond you that they have hired a new CEO at $1 million salary, right? That is majorly on account of this new hiring. Or maybe they will say, like, as per any particular law, they need to pay certain amounts additional to the employees, right? So maybe on account of that, or maybe like in last 2020 when they have applied CARES Act, so they have given extra salaries to those employees which is like underpaid kind of things, right? So that you need to understand the reason. That is called management response to the inquiry and analytical procedure. And these all you need to document alongside with your analytical procedure to complete your analytical processes. Make sense? Yes, no? Push the button.
Yes.
Yes, sir.
After,
Yes, sir.
yeah. So now coming to the documentation required for preparation and compilation engagement. So for preparation and compilation engagement, we should have engagement letter. We should have financial statement or pro forma financial statement, whatsoever you are preparing, and the reporting framework. Next is financial statement and pro forma financial statement. Justification for departure from requirement and how alternate approach if more appropriate in the circumstances. So like we discussed in earlier class, if you are deviating from any accounting standard, then you need to give the justified reason why you have chosen that practice over the accounting standard. You can choose the industry practice over the accounting standard if that give more realistic and more reliable information to the user of the financial statement, right? If that is the case, then you need to give the you need to do the documentation of that. If there is a departure from accounting standard, and the departure will give more clarity or more fair presentation of the financial statement and respective financial statement line item, then you can do so, but you need to ensure the documentation of that.
So maybe there's example to it, departure from the applicable accounting principle rule, where
Yes.
we can skip that thing, because if it's not giving a better presentation, then we can skip that and we can departure that, right?
Yes, yes. So wherever, if by any chance you are departing from any accounting standard, then you need to give the reason why you are departing, and you need to give the explanation what alternative method you are using, and then you need to justify why that alternative method is for more fair and better presentation of the financial statement. So all those things you need to document. Fourth point is your accountant report or compilation report. In preparation, it's cross because it's not required to issue any report, right? But if you are doing a compilation engagement, you need to issue accountant report or a compilation report. That is also you need to keep in your work paper, keep in your file. Last is management representation letter. So that is also mandatory document. So these are documentation mandatory for preparation and compilation engagement. Make sense? And any other document which auditor feel is required for the preparation. So these are minimum documentation required for preparation and compilation, but auditor can have more documentation which he or she feel required or justified as based on their professional judgment. Make sense?
Yes.
Yes, sir.
Yes. Yes, sir.
Okay. So documentation for attestation engagement. So far we discuss on audit engagement, we discuss on review engagement, we discuss on preparation and compilation. Now we are jumping on to the last part, which is attestation engagement. Attestation engagement is your review engagement, agreed upon procedure, or examination engagement, right? So documentation should enable an experienced auditor who has no previous experience with the specific attestation services to understand the characteristics of a specific item or matter. So in attestation engagement is more of examination or agreed upon procedure, right? So what all documentation you'll be making? That documentation should be self-explanatory enough to any third auditor that he will understand nature, timing, and extent of the examination procedure or agreed upon procedure you have performed and the conclusion reached on the respective subject matter which are subject to attestation engagement. So what are attestation engagement? For example, R&D certificate, turnover certificate, certificate in any foreign compliance law, right? So in that case, you'll be testing on specific line item or specific disclosure. You are not testing the entire financial statement. Testing of entire financial statement comes in audit engagement. Review of entire financial statement comes in review engagement. But in attestation, it's more close to specific account, specific balance, specific transaction, or specific disclosure. So it should enable an auditor to understand the characteristics of specific item and the matter tested, nature, timing, and extent of procedure you have performed, significant issue or finding if you have identified any result of the procedure performed, resolve any inconsistency, and conclusion made. Right? So your documentation should be self-explanatory. And again, this should be archived in 60 days from the report release date, and retention should be as per quality control standard of the firm or any applicable law or regulation. And mandatory documentation should include engagement letter, right? Second is procedure performed and conclusion reached on the item or matter which you are testing. And last is management representation letter. These three are mandatory documentation. In addition to that, any additional documentation as the auditor feel required based on their professional judgment. But these three are minimum required documentation for attestation engagement. Right? Make sense? So we are done with the documentation part. We have understood. If you just go back, we understood audit documentation, non-audit documentation. In audit, we discuss about issuer, we discuss about non-issuer. In non-audit, we discuss about reviewer, preparation, compilation, and attestation. We discuss about their retention policy, we discuss about their archival policy, and the minimum documentation is required in each respective areas. Right? Make sense?
Yes.
Okay, let's do some practice question. First question. Audit documentation should be sufficient to allow which of the following individual to understand the audit work performed, the evidence obtained, and significant conclusion made. An experienced auditor, any reasonable person, a manager, partner in the CPA firm, or any certified CPA, any certified public accountant.
An experienced auditor.
Experienced auditor?
Yeah.
Are you all agree with Ayush?
So,
Yes, sir.
Sandeep, Rahul,
1 minute.
Avneet,
Sir, just have a question that why not fourth one, any certified public accountant?
Why any certified CP, public accountant? Like
So
for example,
because
for example, let's say you are a CPA. Let's say in 2022 you qualified as a CPA, but you do not have experience to audit a company like Facebook. You may not in a position to understand many things like they have done in their documentation. That's the reason experienced auditor they are specifically mentioned. The person who have experience of that industry, not for that specific audit client, but he have an overall understanding of that industry. Then only he would be in a position, he or she will be in a position to understand and embrace what they have done.
Even as a fresher, we are not able to understand the audit work, and
Yes.
we need some experience for it.
Yes, that is the reason is clearly mentioned, an experienced auditor. Every year, if you see, we have studied is for experienced auditor, enable an experienced auditor, right? If you see here also, enable an experienced auditor. You have nowhere says like any CPAs. Make sense?
Yes, sir. Agreed.
Okay, second question. Under PCOB auditing standard 1215, the auditor should complete the final set of audit documentation within how many days of the report release date?
सर 45 ही होगा क्योंकि PCOB है तो issuer है,
Yes.
public company, and that is 45 days. और non issuer होता तो 60 days होता.
Yes. Avneet, Rahul.
Yes, sir.
Yes, agree?
Yes, sir, agree with 45 days. Yes.
Cool. Okay, next question. Which of the following procedure does a firm not need to consider when adopting policy for retention of engagement documentation? What all things that firm should not consider? That's the core of the question. Ability to retrieve and access the engagement documentation during the entire retention period. Ability to provide record of change made to engagement documentation after assembly of the engagement file has been completed. Ability to retrieve and access the engagement documentation in perpetuity. Ability to provide authorized external party access to and review of specific engagement documentation for quality control and other purpose. Which of the following procedure does the firm not need to consider?
it should be third one in studying, because we should not be right. It should be the answer should be 3, because we just discussed that we cannot, once we have archived those documentation, we should not be able to retrieve them and change them whenever we want. But as per fourth point, we can obviously if someone is reviewing it, we have to provide those documentation and everything to the party. Yes. So I think it should be third one.
Yeah, Sandeep, Kashish, Avneet.
Yes, sir. It's third point, sir. Perpetuity cannot be, sir. We cannot maintain perpetuity. We even the firm will have some limitations on the space, etc.
Yeah.
And there will be a limit cost statute of limitation also, sir. After some period, we cannot file any case also if there is any something wrong. So in perpetuity, we need not consider it.
Absolutely true. Absolutely. No, right, Sandeep. Absolutely right. So this is all about audit documentation.